that low, that's the low of the PM session that began at pre-session 130. So right there, their sell side. So look at what we have here. We have a short-term minor sell side liquidity pool here. We have this low of the PM session. Remember, look, you're looking at it right here at 350. So looking at that moment right there, looking back to the left, what's the lay of the land? That's the intraday high. We have this high here. We have this low, and we have this low. So we tried to go up higher, tried and failed here. And then at 3 o'clock, we tried one more time and went lower. And we've consolidated and created relative equal highs. So where's the market jagged? There to there. There to there. This is too smooth. So anticipate, not react, anticipate the market's going to trade higher to go lower. Where's it going to go to? It should go below here and continue below here. But how much further can it go below here? To that orange line, which is negative 0.5 level of this dealing range. Okay. See how mathematically specific that is? We're not guessing. We're not hoping and praying. Okay. We're looking at the market saying, okay, I believe that the market's going to behave a certain way. I believe it's going to go in a certain direction. I believe it's going to take out a specific low. I don't need the lowest low. I just need to be in the highest probable area where it could allow me to get out. Now, the obvious, easy one is just put your limit order right at that low if you're scared. That's how you progress. When you're doing limit exits, whatever you think the target is, okay, go one, if in this case, if you're aiming for it from here to go down to get out of a short position, you can do a couple handles above that low and be pleased once it smashes through it, and learn by putting yourself into it multiple times how to trust hanging on to it a little bit longer. You can put it right at that low or one tick below. That's the progression naturally. When you don't know what you're doing, you should practice like that. Okay. But for the folks that want to try to see if they can get a little better of an exit, and you're like me, you want to fancy dance a little bit, how much further can it go below there? Well, we're calling for this mathematically from that range low to that range high. So it opens and trades down to the liquidity pool there. It trades to the mathematic measurement of dealing range high to dealing range low to an algorithmic range projection for the final regular trading hours range. That's this. And when it pierces this, the wicks, again, they're allowed to do the damage. So we have that expansion through, and it goes below that. How much further do you have to go below that? That's the art. That's the art of this. So if you're aiming for this, just above that, it's fine. You don't need to have anything, widely lower than that. So if we take this PD array, which is the premium wick, extend it over, when we entered 3 o'clock and we're trading up, this is where it can trade to, but it should not get in the halfway point of this. So that's going to help me frame what? My stop loss. My stop loss is anchored to this candlestick's wick, because look how many bodies were inside the lower half of that wick. So it can come up here and tap that. And if it does, I'm going to try to add more. I'm not fearful that it's up in this area. Remember, we're looking for buy side to be taken inside this wick. So this line right here, okay, roughly, is in the upper portion of that wick. But it's also the upper quadrant. See that? That's what makes this wick high probability, because it's anchored not only to the octant just below upper quadrant, but it's two key levels part of this dealing range. So that makes this extremely formidable. The upper half, no bodies, but allow for your stop to get close to that. Now, obviously, let's just be honest, I was showing off the last couple of days, and I wanted to show how that stop loss sitting just above that high wasn't getting hit. And you can say whatever you want to say. I'm not here to try to brag. I'm just telling you, this is the logic that I'm teaching. You have to go in and back test and see if these things hold up. I can walk forward with it and trade on the hard right edge. You're going to graduate to doing those things over time, but you're not going to get there quick. So this is where we allow for the errant price action. That means how far it can reach and the drawdown that's permissible for your trade and still be good is basically what I'm saying. Now focus again right here. Right here. Premium wick at 3 p.m. That starts the last hour of red trading hours. That's this candlestick right there. And the wick is right there. See that? So we have this wicks range, and we'll take out the portion so you can see the line here. That's the midpoint line. The bodies, look where they're at. They're only allowed to go in the lower half of the wick, but the wicks can go up and bang the low of that wick. So that's how you're measuring what is permissible for drawdown. Nobody teaches that. Nobody teaches that stuff, folks. They tell you, here's where you put your stop loss. But how many times have you been in a trade and you got scared out of a trade and you collapsed the trade so it wouldn't hit your stop loss? But if you just would have left it alone, you would have been fine. Put a number 1 in the comment section if that's ever happened to you and you wanted to know how to overcome that. The way I teach, because I'm trading the market, the source code, what makes these markets go up and down. If you know what it's likely to respect in terms of the range relative to the time of the day and where it's going to draw to, what's the furthest thing it can do and still be okay with the trade? This wick high is joining this whole area from that wick low up to halfway point. So this becomes a balanced price range, and we've already had it here. And where's the energy leaving that wick? This candlestick. So that tells me that candlestick's high plus a tick or two. That's a really good place to put stop loss, and I don't care. And if it starts flirting around up here, and every time it closes lower, see how it goes up there and it closes lower. It goes up there and closes lower. Every time it closes below here, if I can get something off and enter in the upper portion like that, I'm getting VIP seating, folks. Like if you ever get to a concert, you ever go to a venue and there's open seats, you're not supposed to do this, but you know you've done it. When I was a wrestling fan, I did it. You go closer to the ring or whatever it is you're watching because no one's been sitting there for the first 30 minutes. Maybe they'll come late and make you get out of the chair, but it's worth going over because you have a ticket for the seat you paid for. So they can't take your seat over and say you can't sit there if you have to go back to yours. So it's VIP seating. And I'm not going to claim that I know for certain it's going to do this. I'm going to make allowance for it. I'm making allowance for the trade to have that much drawdown up to that candlestick's high. Now, classic trading ideas would tell you if you're trying to shorten here for any other reason, your stop loss needs to go up here. Not me, Jack. Not me. I'm cut from a different cloth. So I need to know what I need to know in price action, and I'm going to stick to those rules. And I'm not going to borrow the logic from somebody else's stuff. So that's why you'll see it in the trade. That's where my stop loss is at and why. Okay? We're in the last portions of what I'm sharing over the next 2 years. So there's a whole lot of details that many of you have been asking questions for. Well, I'm never going to teach everything I know. What I agreed to teach publicly, you'll get over the next 2 years. But I know you keep dragging it out. That's right. But the market then collapses here and runs quickly below that short-term low, below that low, and then below that low, and finally right there at 356, we get that run right below the target, and it clears the algorithmic range projection on the final regular trading hours dealing range from here to here. And folks, I don't know how you want to call it anything else, but that's very, very precise.